Hello and welcome back to Lion Theories. And what I'm gonna do is go through what I'm seeing in the market right now, starting with the 3 month chart. So this is a kind of newish 3 month cycle because we've only had a few days since it started, and we've got over 2 months left. So we're not even a third way through it yet. So since it's opened, it's just started coming down after rejecting the previous 3 month closing price. Where is it going? Well, we want to see a discount, or we can see at least a quarter of that. And we have seen a quarter of that, and it's giving some problems at this quarter level. So I'm gonna use that as the monthly open because it is the open of this month. And we're gonna drop down to our 1 month chart. So why am I surprised that we're getting problems at this quarter level? Well, we've got a fair value gap down there, which is an inefficiency, and we know how price treats inefficiencies. They retest them, and this right here, it doesn't need to come all the way back down here, as it is in all-time high territory. But after 25% showing so much resilience, I think we could just blame it on the time of year. Okay, there's nothing more for me to say except that. So in this range, it doesn't mean that there's no trades. It just means that we have to wait for a confirmation, which I don't have right now. Off the top of my head. So we trading in a premium of it from previous months range. We're in a discount right now. Let's go on the weekly chart. So on the weekly chart, we can see that what we've done is left all of these inefficiencies down here. 1, 2, 3, 4. And we're respecting the first one right here at the 25% of that large 3 month candle, right? So how does that affect us today? Well, we've this week what we've done is we've opened up here, and since opening, what have we done? Well, this is the previous month range. We opened in a premium, so that is fair value right there on this week. So from fair value, we've come into a discount. At discount, we found support at the 3 month range, 25% level, right? Now, there's no like weekly PD array that is like an order block or something that we've respecting so far, except for that, which is the 1st of June, where price shot down, prices traded above the open on the 15th of June, and we haven't broken the candle this range since, right? So that information alone isn't enough for us to now form a trade or for us to, get a good understanding because I still don't feel like I've got a good understanding. I mean, we got a nice trade yesterday, but that is based on the lower time frame ranges. So we've opened here in a premium, we've seeked discount based on the previous month's range. And found support at the 3 month upper quadrant level. Okay, so far. So let's go on the daily. So on the daily, we have high, low, and it's just more defined on the daily chart how many inefficiencies there are down there. You can see that a discount would be down here based on this energetic price swing up. We could put it back down there, but we're just gonna leave on the 3 month right now. And if we stay on the daily chart and we don't go further than that, there's nothing wrong with that. Okay, we can find the last 20 days range, which is here. You could find the last 40 days range, which would be here. And the last 60 days range, which would be here. So now we're in a process now where every day we need to update the last 60 range. Okay, because every day it's gonna get smaller and smaller. Because every single day you can see that there's a lower high, sorry, a higher low that's formed. So this being the last 60 there, and this being the last 20, and that being the last 40. We should find the EQ for the last 40 as well. So the last 40 opened here. We're at fair value for the last 40. Bam. So from fair value, we're going to want to seek a discount. And fair value is in discount on the last 40. Because I can clearly see that this is the high, this is the low. The last 40, we can just say, is also the same as the monthly. Okay. And where would fair value for that range be? There. So now, if we go and we just get rid of everything behind here, we can just use the last 60 days as price action. Okay. So in the last 20, which is here, we can find the EQ by going from the lowest low, which tomorrow is going to need to update itself, and the highest high. So look forward. The highest high is here, lowest low is on the first day of the range. And on the first day of the range, we get open price right here. Okay. So those are the levels now. We can see that from the last 40, we've been meandering at fair value in a discount. So from fair value in a discount, price should seek a premium, right? Because this was the highest high and the lowest low for the last 40, right? So this is a 40-day range, the highest high and the highest low for the last 40 since basically this day here. Because before that, we would have had to put this as the low, right? So this is the current low since this day. So on this day, what did price do? This is the day that this became the last 40 equilibrium, right? Price opened, traded up, rushed back down to that last 40 open price, and the last 40 open price on that day being back there. So yep, this day, sorry, yes, this day, it was this day, right? So on this day, we look back 20 days. This was the low, this was the high. Okay, so what did price do on this day? It opened, fair value was there. Price opened on the daily chart in a discount. From discount, fair value moved to a premium. From premium, what do you want to see? Fair value, which is back at this open. Okay. A- After that day, price didn't give another retracement. It just came back to the 40-day open on that day. It's open. And then from fair value, it was in a discount. So from discount, it wanted to find premium, which is above here. And from premium, it was to find fair value. So now on this day, where is the last 40 days? Fair value price. Well, we got it here because it's the last 40 days. So there's fair value. From fair value, what do you want to see? Discount. But fair value isn't a discount, so price should be looking for premium. And from premium, we should be looking for fair value, which if it hits it today, this premium level, then we're likely to go back down because there's an order block there. Okay. On the last 20 days, this is the fair value price because this is the last 20 days open price. So from there, price came back to a premium. From fair value, it was in a discount. No, no, no. Let me not get into that. Um, yeah. So on the last 20, where are we? We're in a discount. So we've opened here. From fair value, we are in a discount. Because from discount, what do we want to see? Premium, which is just here. And from premium, we want to see fair value. So ideally, we look for shorts from here because fair value is here and it's the same as the last 40 days. And then we'll be a short back to open, but also premium could be anywhere up here. So from up here, we could look for shorts back down to here. Another way we can look at it is price has already come back up here and is now on the way down back to fair value for the last 20-day range. So we've got this fair value gap here. Not quite at the upper half of it yet, but on the weekly chart, we got fair value up here. It's a powerful level. Very powerful level. So from fair value, we want to see discount, which we have seen by price being below the last 20 days equilibrium. And from discount, we want to see premium. So being in this discount from coming from fair value, premium is here on the last 40, premium is here on the last 20. So, I mean, if we see a change in the state of delivery down here on like an intermediate time frame, we can look for longs up to here, back up to equilibrium. And from equilibrium, which is premium, we gotta see if it goes up to fair value and starts the cycle again, fair value back down to discount, or if we go from premium and forget that fair value, start going back down to this discount. But the next step is up here. Okay. Go straight down to the 1 hour. See what we got. So what I'm gonna do is mark out the previous week's equilibrium from Monday to the low that I made on Wednesday. And from this weekly, it's come back down to previous week, the weekly level of discount. And from discount, what's it done? Came up, it's reversed. We've got a change in the state of delivery. So it's back into a weekly premium. And from premium, we could go for fair value here. Back up to the weekly open, since we've seen a change in the state after taking out sell stops. So after retesting this bullish fair value gap. And yeah, that could be our next base hit. But either way, there will be partials up here. Tuesday potentially making low of the week. Um, but we do have CPI news coming out today, so I've got to make a note of that. And yeah, we are expecting a big trade because now, or a big move, not a big trade, because now we're in a consolidation and accumulation phase. So, I mean, we gotta check the other fair value levels for how we can Aikido our way into a trade, right? But right now, from here, I am expecting price to continue up to the weekly open potentially based off what the weekly's done, which is open and find discount. From discount, it's back in a premium, and then from premium, it should find the weekly fair value, or come back above this level, which is the premium level on the daily chart and the 4 hour chart. Sorry, and the four previous four. Let me slow down. It could come back up to the previous 20 days look back equilibrium, which is premium, or it could come back up to the previous 40 days equilibrium, which is previous 40 days premium. But either way, from here, I'm anticipating longs, um, seen as this sell side got swept into this bullish gap. Whether it continues higher, I don't know, but from fair value, we could potentially see discount again, which would be back below this previous week's equilibrium. So that's just the next base hit.